If you don't have Demat account for trading, find the link in the description to open a new account in Zeroda. Watch full video to understand. If you don't have time, save it and watch later. Are you able to answer the following questions? What the crowds are doing? Who is in control of the market, buyers or sellers? What is the right time and place to enter or to exit the market, and when you need to stay away? In this video I will tell you, as a trader, the kind of skill you need to read the market structure. It's a critical skill that will allow you to use the right price action strategies in the right market condition. And if you can master this skill, when you open your chart, you will be able to answer the above important questions. You are not going to trade all the markets the same way. You need to study how the markets move, and how traders behave in the market. The market structure is the study of the market behavior. Through your price action analysis, you will experience three types of markets: trending markets, ranging markets, and choppy markets. Trending markets are simply characterized by a repeating pattern of higher highs and higher low in an uptrending market, and lower high and lower low in a downtrending market. The market trend either uptrend or downtrend. If the market is making series of higher highs and higher lows, which indicates that the market is uptrending. You don't need indicators to decide if it is bullish or bearish, just a visual observation of price action is quite enough to get an idea about the market trend. If the market is making series of higher lows and lower low, which indicate an obvious downtrend. To determine whether a market is trending or not, you have to use bigger time frames such the 4H, the daily or the weekly time frame. Never try to use smaller time frames to determine the market structure. Ranging markets are pretty straightforward. They are often called sideways markets, because their neutral nature makes them appear to drift to the right, horizontally. A ranging market moves in a horizontal form, where buyers and sellers just keep knocking price back and forth between the support and the resistance level. Trading ranging markets is completely different from trading trending markets, because when the market is ranging, it creates equilibrium, buyers are equal to sellers, and there is no one in control. There are three ways to trade ranging markets, and we will cover it on another video. Choppy markets are those which have no clear directions. When you open your chart, and you find a lot of noise, you can't even decide if the market is ranging, or trending. This type of markets can make you feel very emotional and doubt your trading strategies as it starts to drop in performance. The best way to determine if a market is choppy is just by zooming out on the daily chart and taking in the bigger picture. The price action in the highlighted area is very choppy, and it is moving sideways in a very small tight range. This is a sign of a choppy market that you should stay away from. If a market is choppy, in my opinion, it is not worth trading.